Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, May 13th. The outlook tonight is probably mixed, maybe leaning a little bit lower. First of all, a couple of outside market factors. Greece looks like they're not going to be able to come to an agreement for a coalition government. That's going to lead to the uncertainty of probably new elections again in June. This is not what the global financial community wants to see, so there might be some negative implications there. On the other hand, this was pretty much seen as likely even late last week. China also lowered their bank reserve requirements by 0.5%. Not a surprise that they did that per se, but in the same token, I don't think anybody necessarily expected that to happen on Saturday. That might be seen as a stimulus and a little bit supportive to some outside markets. So I think you got some mixed factors going on there. As far as the grain trade is concerned, U.S. weather is pretty much ideal in almost all locations. Some beneficial rains in the southeast. Next couple of weeks, precip activity will be pretty limited, especially in the southern Midwest and the Delta. Most areas have favorable soil moisture conditions, so this is certainly not a problem, especially at this early stage of development. You also have acres left to be planted, and forecasts suggest that we're going to have very favorable finish to the planting season and very favorable conditions for early crop development. That being said, there's a certain crowd out there that's always looking for something, some fire to throw a little fuel on, and I think those people are going to look at the current forecasts and skip over the fact that it's very beneficial and will remain that way for a couple of weeks, and instead be fearful about whether this is the beginning of a new weather trend, a new pattern, and some sort of dryness concerns developing down the road. I don't know exactly what to say about that, but when every forecast under any circumstances is always bullish, it's difficult to know when you really should view one as being bullish. The reality is the current conditions and the current 2-week forecast is very favorable for crops. I do agree that 2 weeks from now there will be areas that will strongly be seeking some moisture, and we don't know what that forecast will look like 2 weeks from now, but at the present time forecasts and the conditions are extremely favorable. Technical conditions are somewhat mixed. Short-term indicators will certainly build selling interest above the market and limit any short-term rally attempts, but in the same token, I'm not sure our short-term technical conditions are set up to encourage selling interest on weakness here either. Overall, longer-term conditions, fundamental outlooks, etc., I still think point to lower values, and I think that you're going to have selling interest building for multiple sectors of the trade after last week's performance. There's been a greater understanding and embrace of some various fundamental possibilities. I think those possibilities have been around for weeks, if not measured in months, but the acceptance and the embrace of that is beginning to increase, certainly, and last week's trade was very disappointing and demoralizing for bulls, and I think the producer crowd is starting to look at markets and see downside risk, starting to view short-term rally possibilities as maybe in a little different light, that maybe they ought to be looking for some selling opportunities. But at the same token, in the case of corn, these are some very cheap prices, the cheapest prices we've seen for a long time, and it's very difficult to make those sales, especially here in the month of May, when we all know that weather and crop conditions could change dramatically by the middle of July. So it's a very difficult marketing environment, certainly not easy, but I think in terms of this week's trade, I think you're going to find support develop around last week's lows, maybe in front of last week's lows, maybe just below last week's lows. But I don't think you're going to see a lot of willingness to sell weakness here, but you are going to develop a willingness to sell strength. Resistance in beans will be found 20 to 30 cents above Friday's close. Resistance in corn will be found 15, 20 cents above Friday's close. Could we get that type of a corrective bounce over the next several days, this week, maybe part of next week? I don't think that's an unreasonable possibility, but I think the real key here is It's trying to determine, what is a selling opportunity, and do we look for selling opportunity as a producer, or do we look at the market from the perspective that we've already had a pretty sizable break in corn. We're at the lowest we've been in 14 months, so to speak, and should we be expecting the market to bottom out here? Obviously, the weather and production finalities will be the ultimate determinant to that, to the correct answer to that question. But I think at the present time, we have to look at all the favorable conditions that we've got, the large acreage that we're going to have, the large double crop acreage we're going to have for soybeans. We have to look at still concerning global economic conditions and economic growth not being what we'd like it to be. We have to look at the commodity investment world, looking for other places to put money, less enthused about commodities in general. And I think when we throw all that together, we still have to be fearful or respectful of the chance that by harvest time you may have to deal with $4 futures for corn, not 5 something, not low $6 something. We may have to deal with $4 or less. And I think that's a legitimate risk that we need to be concerned about. And until we get a notable weather production threat in the U.S., we need to view small short-term rally attempts as selling opportunities. In the case of the beans, it's probably a little easier to make those sales because we're at more of a profitable level, more of a price level that we can feel comfortable making sales. And I think that that's what the producer should be looking at doing, lock in your profits that are offered. In the case of corn, I realize it's very difficult to make corn sales here, but in the same token, it's not unreasonable to still be very respectful of downside risk. And I think at the present time, protecting the downside risk still has to take precedence over worrying about missed opportunities on the upside. For the DPP Grain Desk, this has been Duane Lowry. Thank you.